Across the nation and live wherever you are, this is Real Estate Talk with Willie Lambright. Get ready for a roundtable of real estate pros that'll bring you up to speed on today's real estate market. Now, here's your host, Willie Lambright.
Welcome all, and I'll tell you for this next hour it's going to be nothing but fair and biased real estate talk. And I'll tell you this, friend, don't listen to me over this next hour, hear me. And I want to start the show off by saying, what would you do when the dream of home ownership turned into a nightmare? And I'll tell you, north of 3.5 hours a day, people are stressing because bad things happen to good people on their mortgage. And I'll tell you, over this next hour, I always say this, Mr. Ron Taylor, knowledge empowers you to make wise decisions for you and your family. How you doing this morning, sir?
I'm doing good, and you do always say that.
Yeah, thank you. Thank you. Live in my studio is my friend. I'll tell you, this guy, let me tell you about him. He has forgotten more than I'll ever know on the topic of loan modifications. As a matter of fact, he has written a book to educate you around the country on how to successfully do a loan modification. I want to welcome live in studio Mr. Michael Fisher. How you doing this morning, sir?
I'm doing fine, thank you, and thank you so very much for having me here this morning.
Well, I want to thank you for taking time out of your day. Before I get started, I want to say hello to KLEY 1130 AM in Wellington, Kansas on ESPN Radio. Hope you enjoy the program. You know, Mike, one of the things that I always try to promote here on this program is the relate button. 1 in 4 people, and heck, it may be higher than that now, have had something go awry on their mortgage. Now, what options do you have when you're upside down? You got the option of bringing it current. You got the option of a short sale. You got the option of a foreclosure. Lord knows we don't want to do that. And then you have the option of a loan modification. But in like anything else, you have to know what you're doing upstream to get a loan modification successfully done. You and I were talking before we went live on the air. You got all kinds of information. What inspired you to write the book for the public the way you did?
Well, I received a number of referrals from clients. I've completed about 400 successful modifications for clients with property in 7 different states. But I would get calls from people who were from states that the law firm wasn't licensed to practice in, so we couldn't represent them. And there were so many people that needed help that we could never reach. And so I had an attorney friend of mine who said, you should write a book. And so I sat down to do that, and I thought it would take about 10 days, and it took 3.5 months. That I could show people exactly what they could do, how to do it, in order to be able to have a dramatically increase into their ability to be able to be approved for a modification without having to go and send thousands and thousands of dollars to attorneys.
Well, you're teaching them a craft in order to save, their home for them and their families. And I really, really like the book. I have read it. I tell you, I think it's very explanatory. Did I say that right, Ron?
I think so.
Yeah.
Explanatory.
Well, you know how it goes. But I'll tell you, I read the testimonial part of it, and over the next, 60, 90, 120 days, you were telling me how many folks will be upside down and lose their home and they don't have to.
Well, TransUnion, one of the big 3 credit reporting agencies, came out with a report in late February that said that 3.6 million people with mortgages, 3.6 million mortgages, were 60 days or greater delinquent. Mm-hmm. And what that means is that in the next 30, 60, 90, 150 days, depending on where they are in that process, 3.6 million people, if they don't do something, mm-hmm. are going to have a catastrophic event in their life where mm-hmm. they're going to lose their homes. And they don't have to. A large percentage of them do not have to. There is a solution, But it takes knowledge, as you said. It takes information to know how to do it properly.
Yeah. Yeah.
You know, Michael, it's interesting as we look at the loan modification process. One question for you as we get kind of into the mechanics of what you know and what the expertise you bring to the table here. As we look at a loan mod option to bring maybe an asset current, can the lender include fees and corporate advances in this process?
When you do a modification, most of the lenders, what they will do is if there's a delinquent amount, if there's delinquent taxes, or any of the fees that are going to be applicable to the loan modification process will be added on to the back of the loan, and then they will be recapitalized over the remaining period of the life of the term of the loan at the new lower rate, which generally in about 98% of the cases that I've been involved in some 400 successful modifications, is usually a 2% interest rate for the first 5 years, then 3% the sixth year, and then the seventh year until the end of the loan, it's fixed, never to go higher, at approximately 4%, totally amortized from the first payment.
And those 400 homeowners that you've helped over the course of your career, didn't you tell me you saved north of what is it, $2 billion, $2 million?
What we did
I know it's not $2 billion. I'm thinking about Magic Johnson here.
When we were writing the book, we did some of the research, and I went back, and I was actually surprised. But the Sum 400 encompassed a total of approximately $2.3 million a year in payment savings. And over the life of the loan, those people will save in excess of $56 million in interest payments. So they will actually, when they get done over the 20, 25, 28 years, whatever's remaining on their loan, they will actually pay $56 million less to live in that exact same home that they were paying.
Now, you know, I said this, Mike, that 1 in 4 people are upside down on their mortgage. You don't necessarily have to be upside down on your mortgage to work a loan modification. If you're north of 5% on your interest rate, I would think that would be a candidate to start this process and go out and look at your book, wouldn't you?
Oh, yes. I've actually had clients who have had as much as $500,000 worth of positive equity. I've had clients who are underwater $500,000 and everything in between. That's not a prerequisite for being able to be approved for a modification. But anyone who has a fixed rate above 5%, or anyone who has an adjustable rate, even if it's currently because of low rates and the base may be low, a bit under 5%. Anyone, though, who has that adjustable rate is absolutely foolish to not take the time and effort to attempt to get a modification, because when rates go up, and they will go up, 1 year, 5 years, I'm not sure when, but when they do, they can approach 6, 7, 8, and 9%, 10% again, and people are going to be priced out of their homes if they don't take advantage right now while we have this unprecedented situation where we are able to cause the lenders to modify a loan that's collateralized by real property. And when this economy changes, and eventually it will, we are never going to have that opportunity and that leverage again where people are going to go in and be able to take a situation where they have, like today, and modify this where they can get a long-term solution so that they don't have to worry about what's going to happen down the road to be able to maintain and keep their homes long-term.
I tell you, me and Ron are going to run and get this book. And I'll tell you, if you're interested in it, just think, Ron, I'd say, folks, go to your browser and put in www.LoanModBooks.com. Make sure you do that in the browser. Don't Google it, okay? Because he's going to put you in there with a bunch of other stuff. But my friend Mike Fisher, he actually is the author of this book, and it gives you the nuts and bolts. Ron, I know you were wanting to say something.
Oh, I think it's interesting as we look at the website, Willie. It's a great site. I love the way it's laid out. There's lots of information. You're really going to go to school when you get to the website. But the bold banner here, and this is something that Michael's talked about before, is he takes it right to the very level. And don't pay thousands to an attorney. Save that money and let's go to school on this process. And Michael makes it very easy, doesn't he?
Yeah, you did a good job. Well, I'll tell you what, Mike, let's, as the host of this show, My job is to hit the relate button, as I said, both on all sorts of real estate, buying, selling, people that are underwater, whatever the case may be. And I was so excited when I visited with you about this book and what you've done and how professional you are, because I think, especially for the folks that are upside down, have gotten a foreclosure posting, usually what happens is they're going to try to do a short sale, which means they have to move out of the home. All right. Well, a loan modification allows you to not move out of the home. But there's so little information out there, and there's so, I always say it's like this, Mike. It's like if I was upside down, I wanted to do a loan modification, I'm a lost ship at sea looking for a calm port, if you will. So, we're getting ready to come to break here in a few minutes. What I want to do in the rest of the hour is kind of talk, highlight a little bit about what the book does and how it guides folks through. Can you do that for me?
Certainly, I'd be happy to.
Yeah. Ron, if my listeners, no matter where they're at around the country, want to reach out to Mr. Mike Fisher directly, they can do that at 817-554-0222. Extension 304. Now, that's the bat line, friend. He has forgotten more than I'll ever know when helping people save their home. Or you can go out in your browser and type in www.LoanModBooks.com. Make sure you do it in the browser. What were you going to say, Mike?
Oh, no, I was going to say that, it's interesting what Ron said about getting information and what you've said previously about information. And information is power. And when you have information, you have knowledge, you do have power. You have to understand that the banks are not going to help you with this. That's not their job to help you. Their job is to represent their shareholders, and it's not in the shareholders' best interest to have you pay less money. So this is something that has to be the burden of proving your case on you. And it's not hard to get a loan modification. You just have to know what to do. Oftentimes attorneys like to pretend that there's this very special knowledge and only they are educated to the point to be able to do these types of things. And that's just flatly untrue. Anyone, almost anyone, can achieve a loan modification if you'll just get some good, complete information, understand what the bank is looking for, exactly how they want it, exactly in what form, and how to make sure your ratios and your formulas are correct in your presentation of your package. There's not any real negotiations in a modification. On the 400 I've done, I actually negotiated with the bank on 2.
Wow.
The package that you put together is your negotiation. And if it's perfect and if it's exactly right, exactly as the bank wants it, you get an approval. If it's not, you don't. And that's why so many people, 1 million people have been turned down, many of them who deserved it and should have had it. But they didn't because they just didn't do it correctly.
Again, if you're just joining us, we're visiting with my friend Mike Fisher. If you like what you hear, 817-554-0222, extension 304. Now, I got a Willie Skosh for you. Scratch your head on this. Friend, stay tuned. I do not want you to touch that dial. I don't want you to move that knob. We're going to be back in the Man, You Can't Play the Drums with Chopsticks, Willie Skosh. We'll be back in 3.
This hour of Real Estate Talk is brought to you by Michael Fisher with LoanModBooks.com, proudly achieving one of the highest success rates of anyone in the country for modification approval. Go to LoanModBooks.com. Here's Willie Lambright.
Welcome back. Thank you so much for your support. I'm honored to be here to talk to you today with Mr. Michael Fisher. Before I get started, Ron, I'm about to be in all of Central Texas, Austin, Georgetown, Seguin,
yes, you are.
Everything. We are growing at rapid pace. So next week, if I can get the old attorneys right here, we will be also talking, in addition to El Paso, Dallas-Fort Worth, we'll be in all of Central Texas, so we're really excited about that. Now,
it's good people in Central Texas, and you've got Waco, you've got all the good people down there, so it's going to be a lot of fun.
Yeah, fun is the key word.
Fun's the key word, always.
But I'll tell you, it goes back to this. Knowledge empowers you to make wise decisions for you and your family, and if you're behind on your mortgage or you are north of 5% and you're scratching your head, you really don't want to do a refinance, all right? I encourage you to reach out to Mike Fisher, 817-554-0222, extension 304. Mike has actually written a book on navigating you through the waters of loan modification. Now, let's do this, Mike. Tell me what a loan modification is and talk through the eyes of the prospective bank. Why are they willing to do this?
Well, loan modification is, in essence, a modification of either the term of the loan, the principal balance of the loan, or almost generally, about 99% of the time, the interest rate that's being charged. And the banks will do this for basically one reason and one reason only, and that is for their own self-serving interest.
I love it.
The reason why is that they realize today that if people are in trouble and that when people have high interest rates, adjustable rate loans, and when they need relief in that they are headed towards a problem or a potential problem, that they need to fix this so that they do not have increased foreclosures. The banks already own too many homes.
Now, I got to ask you something, Mike. Being the host here, and I talk to a lot of real estate people, when a bank has to go through with a foreclosure, doesn't it limit their ability to lend on the secondary market? In other words, pull their funds from a pool. So why wouldn't they want to do a loan modification? It allows them more money to lend, right?
Well, that's correct. However, there's a conflict of interest generally. First of all, the investor that owns the loan is generally not the bank you're paying your money to every month. That's the servicer. They get paid every month to service the loan, collect the money, make sure taxes are paid, property insurance is paid, and they do the accounting. Now, sometimes their interest seems to be contrary to what's the best interest of the investor who owns the loan, because the banks also, when they go through foreclosures, can obtain greater amounts of money in fees. And subsequent to that, they seem from time to time to do something contrary to what would be the most intelligent thing to do, where they're going to lose $50,000, $100,000 on a foreclosure, whereby if a modification was to occur, they keep that as a performing loan. But that's where it comes in to be so important that if people have the information and knowledge as to what to do and how to put this package together, to have the balance of the ratios of what the bank wants to see, and where most people make a mistake, they approach it as if they're applying for a loan or refinancing. If you put your documents together as if you're trying to get a refinancing, you're going to be denied.
Yeah.
If you do it in the way that the bank wants it for a modification, which is entirely different, that is what the information that you need to have. For example, if you're doing a refinancing, you have to have good and possibly real good credit.
That's correct.
For a modification, credit has no standing. Doesn't matter whether it's 400 or 850, means nothing. If you have liens against your property or unpaid property taxes, those would all have to be paid before you could do a refinancing. And a modification means nothing. You can have liens, you can have unpaid property taxes, you can have judgments against you, and still get the modification.
You see, now, Willie, I qualify.
Yeah,
So there you go.
I was about to say, I'm running to the website. Now, you hit the relate button with me. Go out to www in your browser, LoanModBooks.com. Mike, when we come back, I want to still get into some of the nuts and bolts of this. We're visiting with my friend, Mr. Michael Fisher. You can reach him at 817-554-0222. Extension 304. Friend, you'll be glad you made that call if you're upside down. Stick around. You're listening to Real Estate Talk with Willie Lambright, the absolute best real estate show in the land. We'll be back in 3.
This hour of Real Estate Talk is sponsored by Michael Fisher with LoanModBooks.com. Don't pay thousands to an attorney. Go to LoanModBooks.com to find out more. Here's Willie Lambright.
Welcome back. And I tell you, if you're just joining us, and real quickly, if the dream of home ownership is turning into a nightmare, it doesn't have to be. Write this number down, 817-554-0222, extension 304. Mike Fisher, talk about that success story you were telling me during break. A little bit about the bank's philosophy. You know, our general public thinks all the time you got to have good credit to do a loan mod. You don't have to do that.
Well, we were speaking about this and comparing it to the refinancing. And many people have been turned down for refinancing for various reasons, and it can be tough to get today. But all the qualifications for a refinancing are not inherent in being able to qualify and achieve a loan modification. For example, you do not need a credit score. It doesn't matter what your credit score is for a modification. It does for refinancing. You do not need to have positive equity. You can be totally underwater by literally hundreds of thousands of dollars to get a modification, but you do need positive equity in order to get a refinancing.
Correct.
If you have liens against your property, if you haven't paid your back taxes, or even tax liens against you from income taxes, those are not necessary to be repaid for a modification. Whereas for refinancing, they have to be repaid.
You got a zero amount.
You got a zero amount. The reason being is when you do a refinancing, they are going to then put in a new deed of trust. If they don't pay everything off, then that deed of trust filing would be at a date later than the previous judgments or liens, and they would be behind that.
A secondary position in the chain of title.
That's correct. But when you do a modification, you never touch the deed of trust. What you do is you only modify the contract. The deed of trust stays concurrent, and subsequently anyone who has ever come behind that with any liens, property tax liens, income tax liens, judgments against the property will always be junior to that already filed deed of trust when you achieved and bought the property. Therefore, you can do the modification without having to worry about paying those off. Now, most of the time, what will happen is that the banks will even go and pay the property taxes that are in arrears. I had one client, for example, who was a movie producer in L.A. with a big expensive mortgage. He hadn't paid his taxes for a number of years. The bank paid the $92,000 in taxes that were in arrears, brought him totally current, and then added it onto the back of the loan and refinanced it along with the mortgage at the new 2% interest rate for those first 5 years, and then it going on completely until the end of the loan.
And it stair steps over the course of that loan up to a max of 7%. Is that
yes, it does stair step. It's usually what's happened about 98% of the time. What the terms are, it's 2% the first 5 years, 3% the sixth year, and then the seventh year until the end of the loan, it's fixed at 4%.
Are there any prepayment penalties? Let's say I win the lotto and I want to pay it off.
There are absolutely no restrictions. There's no prepayment penalties whatsoever. You may sell the property at any time. You may prepay it at any time.
I tell you, Mike, you've opened my eyes to a very needed craft in our communities around the country. I want you to write this number down. If you're upside down or north of 5%, and I'll tell you, if we hit the relate button, reach out to Mike directly, 817-554-0222. Again, 817-554-0222. Extension 304. You can go out and put in your browser, www.LoanModBooks.com. Stick around as we're going to continue to discover the nuts and bolts. Man, you don't need to lose your home, friend. Just stick to listening to Real Estate Talk with Willie Lambright, the greatest real estate show on planet Earth. We'll be back in 3.
Now, back to Real Estate Talk with Willie Lambright.
Welcome back, and if you're just joining us, I'll tell you, my friend Mike Fisher makes me want to carry an American flag around. You've gotten me pumped up here because at the end of the day, there's hope for people in home ownership. I sit down a year ago on the mic, and I started saying that real estate's not gloom and doom. It's not what you know, it's who you know. And I got to tell you, Ron Taylor and I sitting here going back and forth, but my goodness, knowledge empowers you, right?
Well, I knew this was going to be a great interview and a great time with Michael. But Willie, it's interesting. As we think about this, there are so many people that can gain so much from this information. If you are not going through something like this, someone you know is, and you can pass the information on. So it's a good time to get on the website and make the thing happen for you. Yeah,
unfortunately, man, radio cuts me short sometimes. I wish they'd give me a whole hour to talk up here. And I'll tell you, if I'm hitting the relate button, I fully confident that Mike can point you in the right direction. Make sure you write this number down, friend. Get your pen out. Pull over on the side of the road. Text it. That's what kids do today. Text it to yourself. 817-554-0222. Again, 817-554-0222. 02, extension 304. Again, extension 304. Put that number down. Calling doesn't cost you a dime. Not calling could cost you to lose your home. Or you can go out and put into your browser, make sure you browse it up in the top part. You see, when I get around a computer, my kinetic energy makes it go on the blink. So I'm getting education on this. Put it in the browser, www.LoanModBooks.com. Again, www.LoanModBooks.com. Make sure you put that in your browser. Great information. Great. I've got to go to break here in just a minute, but I'll tell you, make sure you go out to IRNUSARadio.com, click on the Channel 3 button as we are visiting with folks around the country. All good stuff. When we come back, we're going to be talking more with Mike on some of the nuts and bolts that you need to know in this fantastic book he's written. Don't spend it on the attorneys. Spend it on you and your family. We'll be back in 3.
This hour of Real Estate Talk is brought to you by Michael Fisher with LoanModBooks.com, proudly achieving one of the highest success rates of anyone in the country for modification approval. Go to LoanModBooks.com. Here's Willie Lambright.
Welcome back, my friends around the country. I hope you're enjoying this program, and I hope I've hit the relate button. Remember, calling doesn't cost you a dime. Not calling could cost you your home. Reach out to Michael at 817-554-0222, extension 304. Mike, I own a home. $500,000. I own a home. $1 million. I own a home. $2 million. Man, they're not going to do a loan mod for me. Not true, huh?
No, actually, the balance of your mortgage, again, doesn't have any bearing on a modification. I've modified loans. I think the lowest is about $116,000 up to $1.7 million and everything in between. Many of them have been $400,000, $500,000, $800,000, $1 million, $1.2 million, $1.4 million.
Mm-hmm.
That really doesn't have any bearing on whether or not you can have a modification. There are other extenuating circumstances, such as what your interest rate is, what you can adequately afford, what percentage of your income you're now paying. And those are the things that need to be stressed, that need to be put into the package in exactly the right multiples and formulas and ratios. And that's what you have to learn how to do so that you make a compelling case to the bank that makes the bank see this, that we are better placed to give this person a modification to assure that this will be a long-term performing loan rather than to take the chance that something might happen where there could be a possible default and we have to take that property back.
Yeah, it's all in how you dress up for the dance, isn't it?
It's all in how you do the presentation. That's correct. Absolutely.
Now, I was reading through here, and there's a thing called SAM. What is it? Shared appreciation modification. Yeah,
that's something brand new that's just come out about a month or so ago that they're starting to do. And now what they're doing is this: a shared appreciation modification is wherein probably the best way to do is an example of one I just accomplished for a client about a month ago. He had an $800,000 loan. I'd gotten him a modification previously, and he had defaulted because his business was in trouble and he just couldn't keep up the payments. So I had to go back in and get another modification for him. What they did is they reduced the principal balance by $250,000 on the $800,000 loan, leaving $550,000 left. They then gave him a 2% interest rate for the next 26 years, because that's how much was left on the term of the loan. And then subsequent to that, what they did is they gave him these terms, that if any time during the next 26 years he sells the house, or at the end of 26 years when the loan is paid, that $550,000 amount, if there's any appreciated value, the bank is then able to come back and receive 25% of the appreciated value above the reduced principal amount of $550,000. So that if he sold that house in 10 years or in 26 years for $650,000.
That's about $50,000, isn't it?
Well, he'd have to give them $25,000
all right.
When he saved $250,000 on a principal reduction. So it's a tremendous advantage, just a tremendous advantage for someone.
Yeah. Ron.
Yeah, you know, Michael, it's interesting, all the numbers that are being presented here. We make it very easy for the listener as they read the book. You lay this out very easily for them to go through the process. It's not intimidating or a daunting task for anyone to take this on, is it, Michael?
No, it's written so that a person can understand it. I try to give you the background of here's what the bank is thinking, here's why they think this, here is how they view the different things. Here is how you put your package together. Here's how you do your ratios. What do you do if the bank says you make too much money? There's a way to correct that. What do you do if you don't have enough income? What do you do, how you list your expenses, how you have the ratios? All that's important, and it's very easy to understand. It's not written in legalese. It's not written in financial language. You don't have to be a CPA. You don't have to understand finance. You just have to be able to read it and follow the directions step by step.
Well, I tell you what, I barely can read, and I enjoyed reading the book.
Yeah. I feel like I'm going to be so smart after this process. There'll be a degree in the back I can fill my name in, so that's fantastic.
I tell you, if we're hitting the relate button, my friend Michael Fisher, you need to get to know him. 817-554-0222, extension 304. Again, 817-554-0222, extension 304. When we come back, we'll be to the top of the hour, Mike. I just wish I had another hour to spend with you. Make sure you go out and type in your browser www.LoanModBooks.com. What a fantastic learning tool to help you save your home. Friend, stick around as I close the show out. I'll be back in 3.
Now, the system that has proven successful for hundreds of homeowners is uniquely available to you. Introducing the Complete Loan Modification System, the most complex and comprehensive step-by-step tutorial available, written by the actual expert who negotiated hundreds of successful loan modifications, Michael Fisher.
Over the past 4 years, I've completed almost 400 successful modifications, and I've now developed what I believe is the most successful loan modification system available today.
This proven system is a must for anyone who has ever been turned down for a modification. Almost any homeowner can achieve a loan modification without paying thousands to an attorney. Michael Fisher wants to help you save your home and reduce your mortgage payment. So take the first step today. Go right now to LoanModBooks.com for a special offer on a system that will save you hundreds, but more importantly, could save your home. Get started today at LoanModBooks.com. That's LoanModBooks.com.
I'm Jennifer.
Now back to Real Estate Talk with Willie Lambright.
Welcome back, and I'll tell you, this last hour, thank you so much for allowing myself and Mike to join you, and hopefully we've given you some tools to empower you to make wise decisions. So if you're upside down on your mortgage, you got 3 options. You're going to go to foreclosure, you're going to do a short sale, or you can do a loan modification. I'll tell you, when doing a loan modification, it's not what you know, it's who you know, and you got to be able to package that package correctly. I learned some things today, Mike. Great show. Great show. Thank you so much for taking time out of your day to come down and share this. Folks, if we've hit the relate button, there's 2 ways you can get in touch with Mike. 817-554-0222. Again, 817-554-0222. Extension 304. Again, that's extension 304. Or you can go out to the World Wide Web, my favorite place. You can type in www.LoanModBooks.com. Again, www.LoanModBooks.com. Ron Taylor, thank you so much for joining us in the studio.
Thank you, Willie.
Had a blast today. Remember this, friend. I'll say this. RNUSARadio.com. Hit the Channel 3 button. We're here every day giving you the tools you need on different facets of real estate. And hopefully we can help turn around this economy. I'll close the show out by saying, if you can see the invisible, you can accomplish the impossible. Thank you so much for joining us. We'll be back shortly.